Welcome to Market Matters presented by MyX. I'm Joe Teague of Equity Armor Investments. With me is Brian Stutland of Equity Armor Investments. Brian, how are you doing?
Great. It's going to be a good Monday. A lot on tap. Market really moving over the weekend, obviously, or headed into the weekend. Then over the weekend, now into today, big reversal. So we got a good show on hand here.
Yeah, Friday, we saw the VIX spiking into that news event. Very emotional event. I'm sure a lot of people worried. Personally, my dad happens to be in Israel on vacation right now, as you well know. So that was I wasn't that concerned, but it was, you never know type of an event. And just we saw volatility into the weekend skyrocketing. Somebody knew something had happened. And then we saw it all come back this morning. So really interesting to see. But big week ahead of us. A lot of news, a lot of earnings, a lot of Fed speak. There's also going to be the Bitcoin halving event, Brian. This happens approximately every 4 years. And maybe people don't know this, but the halving event has been a catalyst in the past to see Bitcoin take off in the next few months.
Yeah, it really has been. Speaking of rocket ship of the VIX, the Bitcoin itself has been on a rocket ship ride. And we look back here, we're going to get more into this in the show, but this blast off effect of the halving effect, what Bitcoin means versus gold. We've talked about the reflation trade. So our big really, story is inflation, reflation, and how do I trade that? And Bitcoin might be one of those plays, but we'll get into gold. We'll get into some other ideas here too on the show.
Yeah, as I mentioned, the Bitcoin halvings this week. You have 13 Fed speakers. That's going to be critical. We're going to talk about inflation in a big way. But Brian and I were former VIX options market makers, our bread and butter. We manage two mutual funds, long volatility strategies, long options, VIX futures in our mutual funds. This is our bread and butter. We are, VIX traders to the bone. And this is what we're seeing in the VIX futures this week. Volatility is elevated, Brian. We got another week of elevated volatility, and it seemingly is just ticking up week after week. Yet another week, again, we're seeing the VIX future above the front month cash.
Yeah, and it should be, right? Because really, when you look at the VIX, it's made a 2 standard deviation move to the upside. If you look at like the 20-day moving average, which is very significant because it doesn't happen that often. And basically, VIX futures trader raising all futures across the curve on that. We have VIX expiration, April expiration coming off the board on Wednesday morning on the open. So it'll be interesting to see how that roll effect plays it. But the fact that the front month VIX future still at a discount to VIX, that sets up maybe as a play to trade it for the next day or so, but that's a 24-hour trade really to look at. I think going forward, you're going to basically see these back months are staying elevated above the rest of the curve, saying that maybe volatility is going to kind of stick around here.
Yeah, we know this is an election year. We've looked at November futures. We saw that big increase. So volatility is going to stay throughout the fall at least. But just in that short term expiration coming up this week, Brian, like we do anything for our clients? Are we looking at this just like short term, taking advantage of this potential trade?
Well, at first I thought maybe volatility in the VIX could come off today, considering we had sort of the catalyst event over the weekend with Iran and Israel, and really kind of showed that there weren't any major damages. Maybe both sides are willing to calm down for a little bit. I thought the VIX would come off, but it hasn't. We saw interest rates tick up this morning. The market rolled over. We had some Fed speakers, starting to talk, and it seems like volatility is going to remain elevated. There really no indications. Really, if you take a look at the skew index, which we like looking at here, right, as sort of a leading indicator on market sentiment of fear or no fear in the market. What normally I'd like to see is that this skew where all of a sudden it's been bid up, people are buying puts for insurance. I'd love to see that flip where all of a sudden call buyers come in, put sellers start selling out of their insurance in the marketplace, but that hasn't happened, right, Joe?
No, in fact, it's getting a little bit worse. We're getting some acceleration. People are looking at these puts, paying up for these prices. And this, is not necessarily good news for the bulls in the market. People are looking for the market for the rally to find some legs here. It's that you want to see this index falling off and making new lows down here. It's not happening. We're making new highs in this index. So this could be the sign or one signal that the market's a little softer here, a little weaker here at these levels.
But yeah, but let's watch this skew here, and we'll keep it updated because when
Can
it
you,
does
can you
flip,
explain, Brian, to the layman though, real quick?
yeah.
Why does the VIX index or volatility index go up faster when this index, when the puts are more expensive?
Well, when you get that kind of effect where puts start getting bid up and they're more expensive, every sort of tick down in the stock market is this rise in implied volatility level. And the steeper that skew, the faster it rise. People, traders are expecting that rise in volatility to happen much faster. And so that's why you see this skew get very steep where there's extreme put buyers, and then you see volatility really spike hard. And that catches VIX futures traders sometimes off cuff. And then now the short VIX futures traders have to cover, or short volatility traders have to cover. And that can really freak people out. I would mention, though, when this index flips and all of a sudden now you see put sellers and call buyers where this index comes down off of a market sell-off, that could be an area where the bottom happens, but we haven't seen that yet.
Yeah, just real quickly, what I think usually people talk about the smile when it comes to volatility. Usually at the money is here. If this were to go steeper, something like that, that's what happens when this put index gets steeper, Brian. And that'd be the stock market going lower, the S&P 500 going lower. And as you can see, every point that goes lower, the faster the volatility goes higher. That's why the VIX gets more volatile. The volatility goes up faster when this index is steeper. Absolutely. So here it is on just a longer term chart. You can see this actually mirrors, volatility indexes. That mirrors the spike index and mirrors the VIX index. It looks a lot like that. So it's kind of this is another indicator that we like to look at as volatility traders. But Brian, let's bring it into the big trade of the week, the big story of the week. And it's going to be inflation. And this morning we got some fantastic economic data out there. People are still out there spending money in spite of these higher prices. I wish people would stop spending so much money so this economy can get better, right, Brian?
Yeah, right. That's kind of I don't know, conundrum that we're in right now. And basically, the Fed has had some trouble getting inflation under control. We got CPI numbers. That's obviously a little bit of a concern. And is that starting to tick up higher? We brought to you, some charts on this. And so obviously, if retail sales are good, if CPI is ticking higher, if unemployment is kind of staying down, then what's the Fed going to do? What are they going to be able to do? And to me, it's going to be a very difficult situation.
You typically, people are begging right now for the Fed to cut. They think that'll be good for stocks if the Fed is going to cut. Typically, the Fed cuts when the economy is weak. If they do cut now with the economy so strong, I think this might have some other effects. But I do not think we're in a situation where the economy is weak. We need any cuts at this point. We'll wait and see what happens with the inflation data next month. But right now, it does not seem like cuts are in the cards.
Yeah, I mean, let's look at a chart here on the CPI and see how that's shaping out. Obviously, that kind of looks like it's holding steady right here, right? So we haven't got an indication where the CPI is continuing to fall. We haven't gotten anything where it's going back higher. But if you look at sort of a longer term trend of the CPI and what it's done, it starts to worry me that after coming off so hard, it holds and then reverses higher because we get this inflation back in.
Yeah, that's kind of the challenge for the Fed. They have this dual mandate. They want to keep inflation under check. They also want to keep employment, low, unemployment low. Now, historically, they've gone too far, typically, too far on this inflation. They've caused some damage to the unemployment. And, recent history says they want to try to reverse that trend. Well, it's happened in the past where they've missed it. And we talked about it at the end of last year. It's something we've been talking about sometime. This late 70s period where you got this high unemployment and then you had like a double top employment. Inflation data. So this is very tricky for the Fed. They want to avoid that. I'm concerned. Now, this isn't going to be a problem for the short term. It's something maybe 6 to 12 months from now. I'm concerned if we are going to talk about cuts, this is what we're going to see.
Yeah, it's definitely a concern. So, I mean, Joe, if inflation's back, if there's sort of this reflation going on right now, and we haven't really seen a deflationary effect where the Fed can cut, are you trading Bitcoin? That seems to be the news, right? We talked about this earlier on the show, and I want to get to this because Bitcoin is
I
having
just
this
mentioned
week.
one little bit of synchronicity, though. One little
Yeah.
weird fact of history. Like this event happened because of the oil spike, the shortage of the late 70s. It was an Iranian, hostage taking in the embassy. The embargo. So there was, if something like that happens again, certainly this is a potential risk that we have out there. Hopefully not a full scale war, but if some sort of embargo, some sort of oil shock could lead to this higher prices.
Yeah. So
But
I
yeah,
mean, clearly you're outlining a case where there's this inflation concern. So Bitcoin having this week, like I was saying before, what did Joe maybe walk people through what Bitcoin having really means here? Because let's talk about that. And maybe is that something that's investable right now to play the inflation trade?
Yeah, so people love Bitcoin. There's a lot of hodlers out there. I'm sure people watching this are plenty of Bitcoin lovers. But here's one of the reasons why they love it, because instead of like the dollar, there's a limit on the number of Bitcoin that's going to eventually be produced. There is new Bitcoin produced every single day, just like there's new gold being mined, just like there's new dollars being minted. There is Bitcoin. They call it mining. It's essentially miners are rewarded for solving equations, which help confirm all the transactions of Bitcoin. Now, the amount of Bitcoin rewarded to these miners gets reduced. It's approximately every 4 years when that happens. So the amount of Bitcoin the miners are getting is cut in half. So essentially, the supply of Bitcoin is going to be reduced. This is going to happen very likely this afternoon, Brian. So, instead of getting 12 Bitcoins, I'm going to get 6, 5, it's going to get less and less. This is the Bitcoin halving. It makes Bitcoin more rare. It became, there's limited quantity. There's a scarcity to it. A lot of Bitcoin traders get excited about it. Now, there's less people selling it right now. There's also a new supply of people buying it, Brian, with these ETFs. So I think there's a lot of excitement into this halving. Maybe that's one of the reasons why the run up into it. But let's take a look, Brian, at what's happened historically around these halvings.
Yeah. So, we've laid out the fundamental case right here. What halving is on Bitcoin, inflation trade. Is this a play? But let's just look at some technicals right here, just around the halving time frame. And really, the initial very one back in 2012, I think, Bitcoin wasn't that big. And so it kind of maybe caught people by surprise, and you had a huge run up off of that. The last couple ones, there was actually a little bit of Bitcoin run up, almost like front running into that halving time frame. That got people pretty excited that there'd be a limited supply quantity occurring. And that kind of then, after it sold off a little bit, took a little bit of sideways action. We've kind of seen the same technical play out here in 2024, where Bitcoin had a huge run up ahead of sort of this halving time frame. And now it's sort of backed off those highs. I'd be a buyer of Bitcoin, but only when we sort of start to re-break out to new all-time highs. If you look at the last couple of times, it took some consolidation. So Bitcoin might be a little bit of dead money for the next couple months. But obviously, if you look at 6 months down the road, the last couple times, or really last 3 times it's happened, Bitcoin had another huge higher leg up. Now, is this an inflation trade? I think this is more specific towards Bitcoin itself, the supply of that. It's more specific towards a technology play, I think, rather than an inflation trade. And, Joe, I don't know if you agree with me, but I'd probably play inflation a little bit differently. We've talked about gold before in the past. Or is Bitcoin your call on reflation and fiat currency basically collapsing?
Bitcoin we saw this weekend. It's a risk on, risk off trade. It's a technology trade. It's really about this. It's a new currency. It's a technology for a currency, new transactions, new forms of transactions, fast transactions. That's really what Bitcoin is. It's trading much more like a levered technology play than it is like a currency, or than it is like an inflation trade. The historical inflation trade has been gold, will be gold. I think that's what we're seeing with gold, and that it's exactly what we saw this week, and we saw the risk off mentality happened with stocks, happened with volatility. Bitcoin got hammered. People were just looking for cash, or looking to to get out of risk and selling Bitcoin. So for me, it's a risk on, risk off trade. It's not an inflation trade. The inflation trade, Brian, is gold.
Yeah, I would agree with you. I mean, we talked about the call spread that we put on in GLD a couple of weeks ago. I'm still sticking with that. I think there's more room to the upside. 2,500 or higher in gold is to me in the cards.
So let's bring it on to stocks of the week, Brian. A lot of earnings this week, a lot of exciting earnings. Last week, a couple of stocks that we highlighted, ASML, they're going to have earnings. I'm really excited for that one. Goldman had earnings already, pretty good trading revenue. Netflix is going to have earnings. I want to see them talk about AI at some point, how that's going to boost them. Well, is it going to be with their, ad revenue in whatever it could be. I'm sure it could be any number of things, but a stock we talked about last week, Taiwan Semiconductor, they also have earnings this week. We want to look at Taiwan Semi again.
Yeah, let's just, I would like to revisit this trade. We put on with just a simple buy the call. We talked about how we bought TSM for clients, and, it kind of broke out above this $140 level. And so when you look at the technicals, we kind of feel like, at least I do, that we're going to hold the support here in TSM around that 140 level. But I kind of want to protect this call that I own. It's decayed a little bit now. We paid $18 for it, and it's backed off a little bit now to $17. But take a look at it. And one trade I'd be looking at really here is a weekly option trade, right? So we have earnings this week, and end of the week these options expired, and I'm looking at a 1x2 put spread in TSM, buying the 140 put, financing that by selling 2 of the 135 puts, sort of to reduce the cost. I'm pretty comfortable that we hold this 140 level. If you look at past earnings, really a 4% move after earnings is considered a pretty big move. It doesn't get bigger than that if you look at the last 12 to 16 quarters of earnings release, and the implied volatility, option traders only expecting about a 1.5% move in the stock afterwards, which actually seems kind of small for an AI play kind of name, which usually has higher volatility. So I think doing the 1x2 gives me enough cushion where I'm not going to get put to the stock below the 135 level, but I've added some protection between 140 and 135.
Yeah, Brian, and I absolutely love this trade. We know we like this name. We know we want to buy it if it goes lower. So we're just adding some volatility. Volatility is kind of muted into this event. We already have that upside call. We're going to be, potential in this earnings, or the call, which is going to give us participation to the upside. We're going to get this earnings for that call. We're also going to get another earnings event into the summer in August. So it's going to be 2 chances here on these earnings plays for that call. I love that. At some point, they're going to talk about their increased production. I don't know if it's going to be at an earnings event or on down the line, but we know they got a big grant from the U.S. government. We know there's going to be money coming from Japan also. So they're going to talk about their increased production. That has to boost their bottom line. We know promising all these chips that's going to be delivered, they're going to have to be produced by somebody somewhere. I'm thinking it's going to be Taiwan Semi. I think they're going to be the beneficiaries of all that.
Yeah. And I think if this earnings event gives us a pop in the stock to the upside, it's going to probably give a chance to sell an upside call to help finance the September call I bought. So I might be looking to sell, call it a 160 to 170 call level area against that initial call that I bought to lower that cost, because we know after earnings, typically volatility option premiums decline a bit because we've had the earnings event. We're sort of past that. So the expectations for another big move to follow is not as great. So I would want to try and get ahead of that as soon as possible once the earnings is released.
All right, well, that's going to do it for us this week. Recapping, we got the Bitcoin halving, we got earnings, we got a lot more volatility to come. We want to thank everybody for tuning in every Monday, 1 p.m. Eastern. Thank you all for watching, subscribing, and liking, and following, and share it to all your friends. I'm Joe Teagate of Equity Armor Investments.
And I'm Brian Stutland here. We're sponsored by the MIAX, put on by Tradier Hub. Tune in every Monday, 1 p.m. Eastern time, or, follow us on Twitter, LinkedIn, whatever. We'll be out there in social media reposting this video. Tune in, and we'll catch you next time.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.